Alrighty, in today's video, we are going to be talking about DocuSign, kind of what's going on with it. Today this stock fell 42% of value, not to mention it's just continuing, this massive sell-off. So a lot of people are freaking out. They don't know if they should sell, buy, hold, what they should do. And we're going to be kind of talking about what's going on with it and giving a good investment strategy if you already own shares and just kind of my overall outlook of this company. So I hope you guys enjoy it. If you guys get anything in value out of this video, make sure you guys hit that like button, subscribe to the channel, because at the end of the day, it really helps me out when you guys do that. Not to mention, if you want to learn more about investing in the market, I'll put a link to my course down below so you guys can check it out. So what is going on with DocuSign and what is DocuSign? So for those of you that don't know what the company is a eSignature software company. So it really allows people to get signatures electronically. So, before DocuSign, you'd have to fax stuff, you'd have to print things off. Now you can just sign on your phone, on your computer, or any really, electronic you can sign. One experience I had with DocuSign was purchasing my house. I would have my realtor send me stuff, my mortgage broker send me stuff. So I was constantly having to get signatures, and instead of having to print off all these documents and sign them and then fax them, I could just tap, sign my signature and send it all in a matter of 30 seconds or less. So DocuSign, in my opinion, is a fantastic company. It's in a good sector. And honestly, we've seen this crazy sell-off, which is by far the largest sell-off that the stock has ever seen. It literally went from highs here at $255 all the way down to $131 as of today. And you can see, just from the highs down to the low, is about a 49% crash, which is absolutely crazy. That's the largest, the stock has ever seen. Now, you might be noticing kind of what's going on with it, right? So if you notice this right here, this represents an earnings report. So the company came out and released all of their numbers, and they said, hey, the company's not doing too great. We fell short of some analyst estimates, and anytime you have that, it's not the greatest. The reason why is because if you have analysts that are predicting, solid growth and you miss growth, you're going to be having a whole bunch of hedge funds, a whole bunch of investors listen to these analysts. And if they say, hey, the company isn't doing hot, you're going to want to sell your shares. So that's kind of what we saw. We saw a missed earnings report. Nothing too crazy, but just very little to no growth. And that's not good. That means the company could be starting to die off, consolidate a little bit, just because these massive growth companies in general are a little overvalued. And with the stock being overvalued, it does become more volatile, because when you have, a report like this, because the company reported, for the fourth quarter, and it fell short of analyst estimates. That's why we had that sell-off. A lot of people are going to hop out and just cut their losses. And if we actually look at the 3-year chart, you can see before this thing is just a beautiful growth stock, right? Lows at 36, highs at 314. Now, this massive sell-off is something to be concerning. But if you're an educated investor, like Kathy Wood, okay, if we pull up this article right here, Kathy Wood bulks up on DocuSign shares after the bloodbath on Friday. So instead of freaking out and saying, oh my gosh, I'm never going to recover, this stock is dead, I don't know what to do, she has the mindset of, all right, it's a discount. Buying this stock right now is like buying this stock all the way back in 2020. So she has this amazing mindset that, you're pretty much buying these stocks for sale. And that's what I'm doing. I'm going to be picking up a couple of shares. I already own DocuSign, but anytime a stock falls this much and it's still in a solid growth stock and companies go through hard times all the time, yeah, I'm going to be picking up some shares. I personally think we'll get a bounce back from, this 135 mark all the way up to about 165 to 175, right in that zone. It'll probably consolidate for a little bit before we start seeing some, other catalysts start pushing the stock back up. Good earnings, proving, revenue and customer basis and, good margins and all that stuff. That will help this company kind of get pushed back up. But I do think it could take a year or so before we see these highs. I really think we'll probably see a little bounce in some consolidation for a while. So right now I'm just picking up a couple of shares. If you already own shares, I think a good strategy for you would be dollar cost averaging, using the volatility of this stock to your advantage, especially if you have that outlook, of 5+ years. You have to think of Apple. How many times have Apple's shares fell more than 20% since their IPO day? It's actually about 45 times that we've had a crazy fall from Apple. And that's one of the largest companies out there, the largest. So volatility is expected with growth stocks. You just have to understand that, you have to be a long-term investor to survive with these growth stocks. So guys, hope you guys enjoyed it. If you did, hit that like button, subscribe. We'll see you later.